Malls and Breweries Limited, September 2021 results discussion hosted by Valorum Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then zero on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorum Advisors. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and a very warm welcome to you all. My name is Anuj Sonpal. We represent the investor relations of Associated Alcohols and Breweries Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the second quarter of financial year 2022. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call. We have with us Mr. Tushar Bhandari, Whole-Time Director, and Mr. Sumit Jetli, Company Secretary. Without any further delay, I request Mr. Tushar Bhandari to give his opening remarks. Thank you, and over to you, sir.
Thank you, Anujji. Good evening, everybody. It is a pleasure to welcome you to the earnings conference call for the first half and second quarter of the financial year 2022. First, let me start by briefing you on the operational highlights of the company for Q2FY22. I am happy to inform that as the country revives from the impact of the COVID and with the increasing vaccination drive, we saw gradually lifting of lockdown and restrictions and opening up of consumption centers. This restored our sales back to normalcy and to pre-COVID period. Unfortunately, the raw material price played the spoilsport like it has across many sectors. Our raw material price saw an increasing trend of around 8%, but it is expected to remain stable ahead. Our plant capacity utilization for the quarter was 92%. In Q2 FY22, the company strengthened its position in Kerala by tying up with one more bottling unit in order to cater to the rising demand of premium products, which has already started operation. In view of the upcoming winter season, the demand outlook is positive for Q3. Lastly, we are also exploring the possibility to take over promoter's entity of Mount Everest Breweries Limited. Now let me take you through the first quarter financial performance of our company. The operating income for the quarter was around 121 crores, which was an increase of approximately 17% on a year-on-year basis and an increase of 50% on a Q-on-Q basis. Operating EBITDA reported was around 20.4 crores, which was a decrease of 1.4% on a year-on-year basis, but an increase of 31% on a quarter-on-quarter basis. Operating EBITDA margin stood at 16.92%. Net profit after tax reported was rupees 14.3 crores, which grew by 8.3% on a year-on-year basis and 42% on a quarter-on-quarter basis. PAT margins were 11.86%. Now let me take you through the half-yearly financial performance of our company. The operating income for the half year was around 201 crore, which was an increase of approximately 23% on a year-on-year basis. Operating EBITDA reported was 36 crore, which was an increase of 22% on a year-on-year basis. Operating EBITDA margin stood at 17.92%. Net profit after tax reported was 24.4 crores, which grew by 36% on a year-on-year basis. PAT margin were 12.15%. I will now take you through quarterly segment performance. In the manufacturing segment, revenue for the quarter was 37.4 crores. Our merchant ENA sales volume for the quarter was 53.63 lakh liters, which was an increase of 57% year-on-year basis, and the revenue from sale of ENA was 26.6 crore, which grew by 51% on a year-on-year basis. In the consumer segment, revenue for the quarter was 83 crore, which was an increase of around 14% on a year-on-year basis. Our sales volume for IMIL, IMFL proprietary and IMFL licensed brands were at around 8.84 lakh cases, 2.32 lakh cases and 2.33 lakh cases respectively. With that, now we open the con call for question and answer.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Anyone who has a question may press star and one. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Vipul Lamba from Lamba Investments. Please go ahead.
Yeah, hi. Thanks for taking my question. My first question is on there is a drop in our in the volume of our proprietary brands.
Yes.
Any specific reason for that, one? And second is how is our progress on the expansion which we are doing, and when do we expect it to get operationalized? And these two questions.
See, there is a drop in very slight drop in our proprietary brand. That is basically because of the two reasons. One is because of the Delhi policy. There was a lot of uncertainty in the Delhi policy in Q2, and shops were hardly open. Most of the shops were closed because Delhi was moving to a different policy regime, which will start in coming month. Next month, they will start a new policy. So shops were closed, and plus, apart from that, we intentionally did not supply because there was a risk of bad debts in the Delhi market because shop owners did not have a certainty. One reason was that. And second, there was a drop in our sale in Kerala market, slight drop in the sale of Kerala market due to the continued COVID situation. So these were the reasons of slight drop in our proprietary brands. And second, you asked on the expansion front. So expansion has already started. All the orders have been placed, and we are well in line with our timeline of completing the project. So expansion project is completely is on full swing right now.
So as per your estimate, it should start by next financial year?
The Q2 of next financial year.
Q2. And what kind of capacity utilization you estimate once it is operationalized? Just a high level, like currently our estimation is. Sorry, go ahead.
Yeah. So once the expansion is completed and it's stabilized, so we are expecting almost around 90 to 95% capacity utilization, because that expansion would be primarily for the ethanol sale purposes, and right now there's a huge shortage in the ethanol supply.
Okay. Yeah. Thank you.
Thank you. We will take a next question from the line of Abhishek Maheshwari from Skyridge Wealth Management. Please go ahead.
Yeah. Hi, sir. Thank you for taking my question. So my question is regarding the raw material front. So are you able to pass on this increase in costs to the end customer, or is there a time lag? How are you seeing this?
So see, there is a slight increase, as I said, that there is around 8% increase in the price of the raw material. Though we are not able to pass on in one particular financial year the raw material price to the consumer, because our price for this financial year is fixed. But we are trying to mitigate the raw material price increase, because when the raw material price increase, the rate for the byproducts has also increased substantially. So that has helped us substantially. And plus, we have also increased the efficiency in our procurement policy. So we are now directly procuring and doing an efficient procurement there. And by increasing the efficiency in other avenues also, we are trying to reduce the impact of the raw material price.
Okay. So thank you. And my second question is regarding your premium brands. So are we seeing the share of your premium products increasing vis-a-vis, ENA sales? And
Yeah, the market share of our premium brands are increasing on month basis. And plus, apart from that, as I said, that the demand of our premium brands has increased in Kerala. So we have recently tied up with one more unit for job work manufacturing to cater to the increasing demand in the Kerala market.
okay, so would it be reasonable to expect EBITDA margin increment in next quarter or two, or maybe to 13% or so?
We might see overall EBITDA margin, we might see an increase of slightly 0.5 basis point to 1%
Okay.
because of the sale of premium brand. Yeah.
Okay. Thank you. Sir, and my last question before I get back to the queue is regarding the acquisition plan, Mount Everest Breweries. Can you throw some light on that? Is it a profitable company, and what kind of capacities does that company have?
The option is we are just exploring the option right now. Because of the market sales synergies, wherever we go, there's a demand for the entire bouquet of product. So that is that. But apart from that, we are just giving it a thought, and nothing. It's very early to mention anything about that. But Mount Everest Breweries is one of the largest brewery in the central part of the India, and the largest seller of its product in Madhya Pradesh.
Okay, sir. Thank you. I'll get back to the queue.
Yeah.
Thank you. Our next question is from the line of Umakant Sharma from EM Invesco Capital. Please go ahead.
Yeah, hi, Kush. Congrats on great set of numbers and fantastic performance from the team. I hope everybody is doing well in your team. Kush,
Yes,
just a couple of quick questions from my end. When you look at the overall your Indian-made foreign liquor for premium proprietary brands, how do you see the scale up of this segment? Is it going up as you would have expected, or are you lacking out somewhere? And could you also give a brief description or brief your highlight on the regional performance and where you are operating currently, like UP, Delhi, and Bangalore, which you are recent market that you have entered? How are you faring in those markets as well? Could you give a brief highlight on that?
Yeah. So as I said, that there's an increase on sale of our premium brands on month basis in the markets where we entered, and there is a good market traction in our brands. But as you are aware that the developing a premium brand is a time-consuming process. But the only good part is that we are seeing an increasing in market trend or increasing in sale in whichever market we are entering. So that's a positive trend for us. And as for the sale of our product, right now we are present in MP, Chhattisgarh, Kerala, Uttar Pradesh, and Delhi market. So Uttar Pradesh recently we are doing only low-end brands, and this year in the second quarter itself, we have introduced our premium brands, and we've seen a great response of our premium brand. So earlier we had one depot, so we are increasing the number of depot also in Uttar Pradesh market. Second is in the Delhi market we were doing fairly well, but the Delhi market policy has changed completely. So Delhi, they have auctioned their shops into segment wise, and we have fortunately have got a good hold now in Delhi market. So probably we'll see an increase of good increase in sale in the Delhi market as well. And in Kerala,
Indian liquor, we have taken a price hikes of about close to 8-9% roughly on the realization side, right?
We've taken a very slight price hike, but on an overall basis, we are seeing a price hike because of the increase in the sale of premium brands.
Okay. And would you be able to give out a number, just from a goalpost basis? Would it be possible for you to give out a number for the premium brands for our proprietary brand IMFL? What could that number as a percentage of sale could look like? When our full capacity is in play, the additional capacity which is also coming up soon.
The additional capacity, whatever the additional capacity we are coming up with, most of it we will be consuming in the sale of ethanol. But whatever the ENA we are selling right now, so we will try and consume that ENA in the value-added products and sale of our own products. So that's the package. So
Okay. And one more question on this acquisition which you have started on this line of acquisition. I know it's very preliminary stages. But could you just tell me what's the logic behind this? Because I believe they are also present in the same market where you are now. So is it because of the capacity? Because we are already going for a capacity expansion organically.
No. It's purely because of the business synergies. That company is purely into beer, and we are purely into IMFL.
Okay. And
the market they enter is the same, the market which we are entering. So it's purely the business synergies. That is the probable reason we are and the growth of that company and cashing on that. So we've just put a preliminary thought, and now we'll be looking into it and exploring the options. So it is quite premature to comment anything on that.
And if I may just ask, what could be the, so leaving aside, I don't want to get into numbers, but what could be the possible acquisition price that you would be comfortable right now? Not specific to Everest, but in general, because you are also having a capex plan.
See, nothing has been worked on yet. So we've just discussed with the board, and as a lot of people are asking also that there is a lot of business synergy. So why don't you consider? So before starting the consideration, we informed the board in the board meeting. So this has just been decided in the board meeting, and now the work will start on that. Okay. And just final question, would it be possible to give out a margin profile across these segments which you have given out? That is for ENA as well as the IMFL, the proprietary brand, licensed brand, and the Indian liquor. So on a broad basis, if you ask me, in the IMFL, in the ENA, there is a margin composition, EBITDA margin composition of around 10 to 11%. In IMIL, there is a margin contribution of around 15 to 16%. In IMFL, there is a margin contribution of around 20 to 22%. And job work is just on a pure job work basis. Okay, got it. Thanks, and all the best for the coming quarters. Thank you.
Thank you. We'll take a next question from the line of Yogesh Bansal from Bridge Square. Please go ahead.
Yeah, hi.
Hi, Yogesh.
I have a couple of questions. One is that your EBITDA margin has, from the last year, it has gone down from it was 21%, now it's gone to 17%. So you think that about close to 400 basis points has been done because of the raw material increase?
Yes, primarily it's because of the raw material increase. Raw material and everything has increased. Everything is on the increasing trend. So raw material and packaging material, but major impact is because of the raw material increase.
So do you think it will continue like this for the next coming quarters?
In the coming quarter, we are seeing the raw material pricing softening.
So what is your expected EBITDA margin, operating margin? Will it be around 20%, 18%, or between 18-20 or 24-21%?
Between 18-20%.
That's 18-20%. Also, regarding this proposed merger, if possible, as you know that the promoters are both of the same, right? And so what are the numbers now? Just wanted to understand this. It may not happen, whatever it is. But what are the numbers are they doing, and what are the EBITDA margins they have? Just want to get a brief of it.
See, primarily beer is a volume game business. The EBITDA margins are slightly lesser in beer market, but that company is selling now premium brands, and it's one of the largest brewery in Madhya Pradesh, and selling them the maximum number of cases in Madhya Pradesh, and also looking at that company is also exporting to other states also.
So what is the revenue they are doing? This maybe we can talk about last quarter or last year revenue and the margins.
I can just get back to you on that because we've not worked out on the detail completely. And
it's just the basic, it's just the revenue and the margin.
Hello?
Hello?
Yeah. Hello?
It's just the revenue of the last year.
So last year is around 300 to 320 crores.
320 crores. And what were the EBITDA margins of there?
I'll have to check and get back to you on that. So anyway, generally in a beer segment, there's a EBITDA margin of around about 8 to 10%.
8 to 10%. Okay. Thank you.
Yeah.
Thank you. Before we take a next question, we would like to remind participants to ask a question. You may enter star and 1. Our next question is from the line of Vipul Lamba from Lamba Investments. Please go ahead.
So regarding the ethanol business, which we are doing the expansion, what type of margins do we see from margin profile do we see in that business?
Yeah, sorry.
Hello?
Yeah, Lamaji, sorry. Can you repeat your question, please?
Yeah. What type of margins do we see in the ethanol business for which we are doing the expansion, and kind of revenue which we'll get from the expansion which we're doing if the utilization is as per the plan?
So basically the margin in ethanol business will slightly higher than the margins in ENA sale business. So it should be around about 11 to 12% margin that we are looking at.
Okay. And it is linked with the crude price also. If it's for example, if in the next 6 months or a year it goes down, it will have
not linked. It's not linked with the crude price, but it's definitely linked with the grain price. So in ethanol business, every product category has got a different pricing. Like ethanol from molasses has got different price. Ethanol from grain has got different price. So that government decides the price. So like on a contrary, if you see that the fuel prices have gone down, the government has reduced the fuel price before Diwali to around about 7 to 8 rupees per liter. But on the contrary, the government has increased the price of ethanol, given a 1.5 rupees increase in the ethanol price.
Okay. So practically, you are considering the expansion in next say 12 months. Our revenue and profit after the expansion should be at least 60% higher from there when the project gets completed and operations.
Definitely.
Okay, fine. Thank you.
Thank you. Any participant who wishes to ask a question may press star and 1. We'll take our next question from the line of Sunil Jain from Nirmal Bang. Please go ahead.
Yeah, thank you very much for taking my question. Sir, my question relates to your expansion. Can you spell out how much is the investment which we are doing for this expansion and what will be the capacity?
See, total expansion what we are doing would cost us around 120 crores. So which will include the new boiler, turbine, and we are setting up a capacity of 1 lakh liters per day. So that's the capacity which we are setting up.
1,000 kiloliter per day.
Pardon me?
100 kiloliter per day.
100 KL, yeah.
Yeah. Okay. And what will be the raw material? Means grain you said, but exactly can you spell out what type of grain and
so on the grain, what we are again going here is we are going a multiple grain field plant. So basically, depending on the yield of grain and depending on the price of the grain, we decide the grain. So right now, for example, the corn is quite expensive, and we are getting rice at a reasonable price. And rice has got a better yield and output of alcohol. So we are going in for rice. So it will purely depend on the market dynamics and the economics. So we have also whichever grain has got starch, we can use that. But completely depend on the economics and the price at what the raw material is available at. Then we switch the grain accordingly.
So rice in the sense whole rice you will be using, or it will be a broken rice or something?
Broken rice.
Okay. So still margin what you are calculating seems comparatively lower as against your competitor or some other player.
Wait, I'm talking about the pure ethanol business when you're talking about. So definitely, as compared to the competitor, I will get a better margin because I would have the economies of scale. Because with the same amount of staff, I'm almost adding a lakh liter a day capacity. So my overhead cost would be per liter overhead cost will reduce substantially.
So I think there is a good margin people make from byproduct also. So that is also included in 11-12% or no?
Yeah. That is included in the price of yeah.
Okay. Fine. And currently, whatever you are making the ENA and all, that is also from the same raw type of raw material.
Grain. Yeah.
Grain only. Okay, sir. Thank you very much.
Thank you.
Thank you. Our next question is from the line of Dhruv Kashyap, an individual investor. Please go ahead.
Hi, good afternoon, Tushar, and once again, thanks for the way you and your team are leading the company, especially in these tough times. I had a couple of questions. First, with respect to, I understand that you've said that it's very preliminary, but from what I have been able to gauge, I need your help to understand this, that Associated Alcohol has been a very focused spirits company over the years, and it's done very well on its CAGR and ROCE and ROE, etc. Mount Everest Breweries Limited did a top line of about 290 crores in 2019. It dropped to about 250 crores in 2020, and it seems to have done about 143 crores in the first 9 months of the current financial year, with about a 3 to 4 crore loss. And in FY19, it was about a 8-9 crore profit, and FY20 was a 8-9 crore profit. I am just not able to see the synergies between these two businesses at all, because one is such a margin accretive, profitable, you are up trading, you're trying to move from contract manufacturing to own brands. On the other is a beer business, which is a pretty low margin and only a volume game business. So I am failing to see the synergy unless there is a promoter synergy that the promoter wants both under the same roof.
Now, you see, apart from the major reason of it is that the synergy, because if you talk about particularly on a preliminary stage, if I talk about only Mount Everest Breweries, so Mount Everest Brewery is the fastest growing beer company in the country. So within last 10 years of its existence, it has moved from per month manufacturing capacity of 1 lakh cases per month to 10 lakh cases per month. Okay. Plus, apart from not only looking at a low margin business, Mount Everest is also into the premium brands and premium beer, craft beer and all. So the synergy, the only reason why we are exploring this option, or because there is a huge synergy, because whichever market we go now, so they have a combination. They want a combination of both a person who is able to supply. See, for example, if in Delhi market, okay, Delhi is privatized shops. So whichever player I'm going, they are asking for both beer and spirit. There are a lot of, the only advantage in beer is that there are only few breweries who can sell beer. Okay, but what happens when it comes into IMFL? So there is a huge entry barrier there. But what happens in the case of IMFL is anybody can have a bottling license or a bottling tie-up and start its own brand. So for example, tomorrow you can also have a bottling tie-up and start your own brand. So there's a huge entry barrier and there are very few players. So people look for beer first in their shops and then they are looking for IMFL. So there's a huge synergy whenever we go in outside market from Madhya Pradesh. So there'll be a huge synergy. So that is only exploring. And plus, apart from that, whatever numbers will come, if we see it's adding value to both the companies and it's adding value to the investors, then only we will take a call of mergers or something like that.
So, Tushar, if I've understood you correctly, what you're saying is that outside MP, it is easier for you to get a foothold into the store if you carry both beer and spirits. And it's sometimes in markets like Delhi, you get an entry into the shop through the beer into the spirits. Have I understood you correctly?
Yeah, just an example, that's what I'm giving. Delhi is just an example what I've given.
No, I understand that, but that's what you were saying. So it's a piggybacking on each other's distribution sort of entry, so to speak. Is that correct? Is that what you're saying?
Yeah.
Because if I look at the financials, on 300 crores of top line, if you do a profit of 8 crores, it's a 2.7% PAT margin versus Associated Alcohol being on between 12 to 15. So from a financial synergy, I'm just not able to understand why such a focused and profitable spirit business would like to get into such a dilutive and completely volume, almost like retail moving to wholesale kind of a business. If I was to give you another example of another category, I mean, from a financial synergy, I just can't understand why Associated would want MEBL in its portfolio, unless, as I said, it's to suit the convenience of the promoters.
No, the financial synergies is still to be explored. So we just put, like, see, there's nothing that we just want, there was a thought which had come up, so we just wanted to put it on the board and keep the investors informed about it. So we are not sure whether
permission. I'd like to add something. Mr. Dhruv, see, basically when you are going to analyze the financial of Mount Everest, so I think at this platform, at this juncture, we could not explain it that the sales proceed and the realization factor. Because the Mount Everest also do work or job work for some of the leading MNCs or the leading beer brands. So it would at this point it's very it would be very very nascent stage to say कि भाई उसका जो फाइनेंशियल्स का टॉप लाइन है और जो numbers पैट के EBITDA के बन रहे हैं उसका एक it would be too early to comment on it right now.
Sir, I understand it's early to comment, but as an informed investor, I know each and every financial of MEBL. I know that it does job work for UBL and so on and so forth, and which brands of UBL. So as an investor, I am preempting because one fine day your board will decide and say the merger is done. Then what's the point of me raising the concern then? So I am just raising it as a informed investor that these are my concerns, because normally when these entities are merged for promoter convenience, it is always the minority shareholder who is shortchanged. So I am just raising the concern. You might say it's too early, but every financial of MEBL I know. There's nothing new that I'm going to get to know later.
Sir, financials are domain. Everybody is having access to it. So that is not a point. That we do understand.
Yeah, but see, we are just...
No, you are saying, you're going on saying it's too early. I'm just saying that I am voicing my concern because there's no other forum to voice it. When later you come with a final decision, it's too late.
And absolutely well taken care of. So that's why we also wanted to, before giving it a thought also, we wanted to have it in a public domain, and we wanted our investors to be aware that something has like this is being considered. So there is no decision made, so things will happen and the working will happen. And then if we feel it feasible, then only we will take a decision on it.
Great. Tushar, I have nothing against this. I just wanted to voice my view, and I thought this is the forum to do it, so I voiced it. Right. The second question, Tushar, I had was that on this expansion that is going from 4.5 crore liters to technically 7.5, but actually 8.5 crore liters, you are saying this will come on stream in Q2. So I'm assuming sometime in July, August, September of 2022, it will come on stream. Now, if that is correct, can you just help me understand the mix that in 8.5 crore liters versus the 4.5 crore liter currently, how do you see the mix evolve in terms of IMIL, IMFL, own and contracted, as well as ethanol and ENA and likes of that, so that one can just understand what will the company's revenue and margin picture look like 1 or 2 years from now?
Okay. So basically, whatever the additional capacity which will come, okay, that will be primarily and solely be utilized in the sale of ethanol. Okay. And right now, whatever ENA what we are selling, round about, say, on an average of around 15 lakh liters per month, so that we will try to convert to the maximum into value-added products.
Okay, so if I've understood you correctly, that almost half in the future you are trying to put it into IMIL, IMFL, both contracted and own proprietary brands from the current 4.5 crore liter, and the other 4 crore will go purely to ethanol blending. Is that correct, or is my understanding wrong?
Yeah, absolutely right.
So then how will the margin profile evolve?
See, the margin profile will evolve because here I'll be selling the pure ENA, right? So instead of pure ENA, I'll be selling the value-added product. Okay, one is that. Second is that my EBITDA contribution in my overall sale of ENA or in ethanol would increase due to economies of scale. So with the same amount of staff, I will be able to increase with the same amount of staff, I will be able to double my capacity. So my overhead cost per liter will reduce substantially. And second, we are also in a new project. We are also putting a turbine which will take care of entire power for the entire unit. So apart from the regular factors, these are the factors which will increase the margin.
So would it be fair to say that the blended EBITDA at the destination state of 8.5 crore liters would be somewhere the same as now, which is 18 to 20%, or would it be more, or would it be less?
Somewhere around the same.
So there won't be any improvement in overall margins because of this expansion.
Yeah, but only if the the margins will slightly increase, because only the contribution will come because of the increase in the sale of the value-added products and the premium brands. Because during the course of action in next 6 months to 8 months, we are also launching certain premium brands, like a super premium brand, like a premium gin and a premium blended scotch. And we are also working on a single malt, but that is a time-consuming process. That will take time.
Okay. So fair to say that it will remain at about 18 to 20% EBITDA margin in the destination end state, because the current 4.5 crores hopefully all migrates to value-added products. So it increases the margin because the ethanol part will come down or become zero, and the ENA part. And in the other 4 crore that we'll add, the liters will all go towards ethanol blending, which is more at about 11-12% odd margins.
12 to 13%, yeah.
So blended will remain at 18 to 20% at a company level all put together. Is that a fair assumption, or will it come down or go up a bit?
No, that's a fair assumption.
Okay. Tushar, my third question was that we've had a lot of disturbance in Delhi, and since I live in Delhi, July, August and September, the private shops stopped buying because 30th September the license expired. Now, 16th November, the government shop's license expires, and they have stopped buying for the last 45 days in the Diwali period, where everybody has cards, parties and all. There's been low liquor in Delhi whatsoever. Now, tomorrow, 17th, is when the new private 850 stores start coming into action. How much of a contribution of the company comes from Delhi, and how badly disturbed has both last quarter and this quarter been, and hence do we see a significant impact in this quarter, as in December quarter financials as well? And when do you envisage this improving? Because once the new stores start, they will also have to stock up from zero. So there'll be a lot of primary filling in, right? So what's your read on the impact of this whole Delhi situation on your company?
So the thing is that if I talk about pure Delhi as per se, so Delhi from last year second quarter only, we had reduced our sales substantially in Delhi market, because we were seeing disturbance in the Delhi market, and we were seeing a threat of bad debt in the Delhi market. So we took a genuine, irrespective of the demand in the Delhi market, we started reducing our supplies and controlled and concentrated on the recovery, because we were aware that this thing is going to happen. So once the shops are closed, then it's difficult to recover the money. So that way, if compared that, we've not been impacted that much because we controlled our supplies in last year only. But now, in going forward, we are seeing a strong contribution to come from the Delhi market, because we have tied up with one of the major, as you're from Delhi and you're aware that most of the shops were auctioned in group wise. So one group has almost 25 shops. So we have tied up with the major player who holds almost 40% of the Delhi shops. So we've just tied up with him. So that will give us a greater contribution in coming months. And immediately you would not start, because we are in the process of all the processes there, label registration and all. So it's a time-consuming process. But in the coming months, you will see the sale in Delhi of ours increasing.
Mr. Kashyap, I'm sorry, you'll have to return to the queue. There are several participants waiting for their turn. Thank you. We'll take a next question from the line of Sri Shankar from InCred Capital. Please go ahead.
Yeah, I probably joined a bit late, so there may be a repetition of my question. But anyway, can you explain to us now, where are we going to see a bigger growth happening? Is it in IMIL, the expansion, once the expansion comes through, or at IMFL proprietary? And can you also give us some idea? You mentioned that you're probably launching a gin, you're probably having a plan to launch a single malt, etc., etc. But what is the over the next couple of years? What is your strategy of going for some of your own brands, and how much are we going to increase your licensed brands production as well?
So basically now our pure concentration is our own licensed brand and our own value-added brands. So there we see growth, and we are seeing a growth on a month-on-month basis in the various markets which we've entered. So see, earlier we were just an MP-centric market, and now if we have to grow and in terms of the volume, then the only option is either